The technicals look bearish. Let's jump right in to the S&P 500 on Sunday night charts. We take a look at charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. Here we've got the breadth indicator on the percentage of S&P 500 stocks above their 50-day moving average, just now under 35%. And in the past, this has been a huge buying opportunity. You can see going back to October, December, late February. Every time it gets down here, there's a pop in equities, and what we should expect to see now is potentially a roll down and come back down into perhaps below this 30% and give another buying opportunity, at least in the short term. It may not be a long-term buying opportunity, but potentially short-term buying opportunity. But this is a risk-off market. Let's take a look at the percentage of S&P 500 stocks above their 200-day moving average. Now, and when a stock is below its 200-day moving average, it's considered to be in a bear market. We can see now a mere 45% of the S&P is above its 45-day or 200-day moving average. That's very weak, and again presents another buying opportunity down in this range. And that's why you're seeing people buy the dip, and maybe you're doing it, but this is what's going on is people are looking at these breadth indicators and looking at some of these other indicators and say, look, this is a great time to buy. And look at the historical, percentage of S&P 500 stocks above their 200-day moving average. When you get down into this 40% range, as you see, I've marked multiple spots here, that it is a buy the dip opportunity. Unless it's not and it breaks down through here. And if it does, well, then you're going to have an even bigger opportunity to buy if you don't get wiped out on the way down. And even the other technicals, you look at the relative strength indicator, it's over 40. It's sitting at 43. As long as it's sitting over 40, it still has some positive momentum behind it. And even though we got a brief dip down just above oversold conditions, it's popped back over 40. And that's, again, why you're seeing people buy this market. I think it's potential risk off here. Look at the MACD. Even it's confirming. It has a positive cross. The MACD crossed over its signal line and is giving positive confirmation. And, when we turn over to Momentum Timer Pro now, the new version 6 is from the Friday report. I'll put a link in the corner and in the description below. It's still currently free. And what it does is it looks at the MACD, the RSI, and Momentum Timer Pro's momentum signal. Two of the three have to confirm to give a buy signal. And what do we see? The last 2 days are buys. And why is that? Because, well, the RSI and the MACD are confirming signals. Now let's look at the longer term indicators, because, you look at the MACD, you look at the RSI, and it makes sense why people are buying. It's not just a breadth story of being weak. There's just all kinds of indicators saying, hey, buy, 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 buy. But the bigger picture here may be sell, sell, sell. And let's look at this. The moving averages, they're headed down, but still bearish. Momentum on this week, now below all the key moving averages, even below everything below 6-month momentum is negative and falling. That's where you see those big algorithm programs start to sell, is when you see a 6-month momentum goes negative. They want out. Let's take a look at the charts, because maybe the volume profile gives us a different picture. And the answer is, well, not a very good one. If you're looking for optimism here, you don't see it in the charts. Look at the volume profile line here on SPY. You can see sellers right above this red line. That's not good. Let's zoom in. Maybe there's some hope here. We go to the 90-day chart. Well, no, the red line is way above. How about the 30-day chart? It's above 2. So what does that tell you? Every time price is going up, it's running into sellers, sellers, sellers. And when it does that, what happens to price? Well, it goes lower. Let's look at the 10-day, and sure enough, it's telling you even the last 10 days, sellers have been there. Where does this mean the price is likely to go? It's likely to retouch the supply zone down here at between around 420 and say 413, where it tagged below. So at this point, look for price. And you look here on the 1-year chart, you can see it there. Let's see if on the 2-year chart. Yep, you got sellers above there all the way out to 2 years, telling you price more likely, high probability, the price is going to go down, and find out if there's still more buyers in this supply zone below. So far, sellers above, buyers below. Let's take a look at the Nasdaq, see if we get a better picture there. Maybe tech stocks give us some hope for a resumption of the uptrend, and look at the percentage of Nasdaq stocks above their 50-day moving average, below 20%. Again, this is what you would see as a huge buying opportunity. This is what you want to find if you're looking to take an entry point, but it's been down here since late January, and price keeps falling. So not a good sign. Breadth being weak. How about percentage of Nasdaq 100 stocks above their 200-day moving average? Now sitting below 30, and this has again been buying opportunities. You see here late January, people came in and bought, price went up. Then you see It came to late February. People came in, price popped, but there's a lot of weakness in this market. It's why it looks like it's risk off. Take a look at the historicals. Anytime you get down near this 20% range, it's been a buying opportunity. If it doesn't hold, you're going to get a massive buying opportunity and a potential massive liquidation of the equity market. Let's look at the relative strength indicator. It's still holding over 40. Again, showing some positive momentum. Doesn't show it's a lot of strong momentum. Still momentum being positive here. So we know at least we've got one positive signal for the daily momentum timer pro. But how about the MACD? It's higher than a signal line, black line above the red line. It's rolling over, suggesting it's going to cross back down, and that'll be a bearish picture. But for the moment, if you've wondered why people have been coming and buying this dip, you're seeing the RSI, you're seeing the breadth indicator, you're seeing the MACD, and no surprise, Momentum Timer Pro 2 out of 3. We already know which 2 it is. Even if all 3 are confirming, you've got 4 days of buy signals, and that's why you're seeing it, because short-term momentum is there, but maybe not for long. How about the longer term or bigger picture? Price on the moving average is headed lower. That's not a good sign. Momentum remains bearish on the 50 and 100 day, below all the key moving averages. Below everything below 6-month momentum is negative and falling. That's not good. Let's take a look at price and see if maybe volume profile helps us out here. And on the 1-year chart, you can see where buyers are at. I mean, this is a good sign. They're down here in the supply zone, and where we see this nice red bar. So that's showing some volume support. Let's go out to 2 years and see in 2 years they're above. So you'll notice what's happening is bouncing between these supply zones. So down here, you've got buyers. Up here, you've got the sellers. You got some fairly long-term buyers. You got some longer-term sellers. Let's go to the 6-month window here, and you see sellers way above there. How about the 90-day? Sellers above. How about the 30-day? Let's keep zooming in. Sellers above. That's not a good sign for price. 10-day sellers are above. Not a good sign for price. Tells us that perhaps the Nasdaq 100 is going to come down again, maybe even down here to 318, into the 318 zone or 320 zone, and see if it can find some buyers there, because so far there's not a lot of strength. And what we don't know is on this 1-year chart, if these are sellers just moving their bar down a lower level. So look for, again, tech stocks to head lower this week to find some confirmation, find some buyers there. How about the small caps? Small caps are trying to find some life here. Now, they've been battered and beat up. You see the percentage of the Russell 2000 above their 50-day moving average is just under 30%, and it's slowly climbing. So it's getting some momentum here. And small caps tend to lead the large caps. So there's some positive signs here. And not a lot of strong momentum. Maybe looking back here to July, you saw, the percentage of stocks above its 50-day moving average rising faster. So momentum here is not terribly strong. Let's take a look at the percentage of stocks in the Russell 2000 above their 200-day moving average, sitting just over 31%. No sign of life here. And what this is telling you, for every stock that comes out of a bear market, one's going right back in. So no momentum on the long-term picture of the Russell 2000. And historically, this should be a buying opportunity, which suggests that perhaps there's a massive risk-off plunge coming, which could be dangerous. How about the RSI? It's giving a positive signal. It's over 40. And again, went from oversold condition here late January, got a little momentum behind it, and it's not a lot. It's not strong momentum. I mean, what you'd like to do is see it maybe come up above 50 and come back down, but the momentum's still weak, but still showing positive signal. How about the MACD? You've got it's above its signal line. That's showing a positive signal. So from a short-term perspective, again, I want you to understand why people are buying these dips, because everything's telling them to. But there's something bigger picture going on. It's as if the Fed is draining liquidity. 5 consecutive days of buy signals. Again, 2 out of 3. RSI, MACD, or MTP giving a positive signal, and you've got 5 days of those. Again, why people are buying this. Bigger picture, though, 21-day moving average now turning bullish, so that's a positive sign. The longer-term moving average, the 50 and 100, are going to be slower turns, so this is a possible good indicator. We'll take a look at that in a moment. Remains below all the moving averages beyond that, and 1-month momentum is positive. So again, if you go from all red, you got to start somewhere, and this is where you'd want to see that transition. So let's take a look at IWM. and see what's going on here. Now look at the 21-day moving average. See how it's kind of bottoming out, starting to try to turn up. Well, that's what you want to start to see in a bottoming pattern. Now what should happen is the 50-day moving average will act initially as resistance. So price should try to come up here and hit that and then get rejected. That's what you want to start to see in a bottom, and then it'll continue to trend along and start to build up and put upward pressure and flatten that 50-day moving average out. Notice that here we are on the 1-year chart, sellers way above. Let's go zoom into the 6-month chart. What we're looking for is that we want to find that the buyers are down here somewhere, putting some upward momentum. You see 6-month chart up there. Let's zoom in a little bit more. How about 90-day? It's kind of a no man's land here in small cap world. You've got buyers right below and sellers right above. Let's keep going a little closer. How about the 30-day chart? And maybe you're getting a picture that the sellers are a little more dominant here. How about the 10-day? And just keep zooming in, and you see sellers are hitting every time price comes up. Sellers are there. Will still suggest to me that if this chart here, this pattern that we're seeing build here, if this doesn't get some upward momentum and it bounces off its 50-day moving average to the downside and it doesn't break back into the supply zone above where you see sellers, that the ultimate direction here for Russell 2000 is down here into the 160s and fills that gap. That's where it's likely headed. All right, let's go on to high yield bonds, because remember, credit or junk tends to lead the broad equity market. And what do we see? RSI dipping below 40. So that is a bearish picture there. How about the MACD? It's got a positive signal. What about Momentum Time Pro? Yes, well, you got to sign up to find out what it thinks, and you'll get your next report on Monday morning, 6 a.m. Pacific, 9 a.m. Eastern. How about price? Bearish across the moving averages, below all the key moving averages, below all momentum signals. Let's take a look at HYG and see if we see any movement in the credit market that would change our picture here. Here we are on the 2-year chart. Sellers above here. Of course, we know who's selling: corporations selling debt because investors want to buy it. And look at the 1-year chart. Sellers above there. How about we zoom in the 6-month chart? Sellers above. 90-day. This is not looking good. Sellers above. How about 30 days? So there you see some bottom start to come. This is what you want to look for in a bottom, is buyers come in. And so people are now coming in buying what they perceive is junk bonds, distressed debt at a price that's a little too low. They think the economy is going to turn, or perhaps geopolitical conditions are going to change. So where now you're seeing some upward potential here in the high yield bond space. We got to zoom out pretty far to see where this chart goes, because if it doesn't hold on to this, and it's kind of like at that zone of last support on the 2-year chart. Let's go out to 5 years, and this thing is teetering on the edge. I mean, if it comes back down to that low that it set here recently, it breaks all the way down. So people are buying in, hoping that liquidity holds. But with the Fed unwinding, it looks pretty dangerous. Anyways, I'm Steve Van Metre. Thanks for watching. Bye now. The content of this video is provides educational information only. Is not intended to provide investor advice. It will have to be construed as recognition or solicitation by a security financial instrument or participate in particular trade strategies. Very well prepared by Steve Van Metre. Personal capacity. Opinions expressed in this video that do not effectively value Advisors Inc. or Steven Van Metre Financial.